Hi and welcome to this quick TA session on how to draw levels. This session is going to feature a lot of different ways on how to draw levels properly on a chart, on a clean chart like this. We're not using any indicators and we are going to focus solely on what price is doing here and how we can find levels. Please have a look in the description. There's a list of requirements you have to have in order to understand the topic. So this topic right here, drawing levels, is fairly easy. So you don't need anything besides the ability to read the chart, and you have to know what candlesticks are and how they work. So if you don't know about that, please have a look at one of the resources for reading how to read charts. Okay, let's start right away. The first kind of level we are going to draw is a level that shows prior support and resistance confirmations. This means that price has interacted with a level before from below and from above. We're going to look for such a level right here in Bitcoin on the 4-hour chart. So, for example, let's take this level here. As you can see, price approached the level and it actually made a top here. So it went above this level and confirmed support on it. Price bounced a little bit, it came back and confirmed support once again. This means this is a level. You can draw this. You can keep drawing this. You can stretch this out for a while and you can see that price is still interacting with this level. As time passes, the level becomes more and more insignificant, but we are not going to talk about significance of levels right now. This is a topic for a later session. But this is a way how you can draw a level and you can see for yourself how significant it is. The second way to draw a level is you use the highest candle close or candle open in a swing. So for example, this here is a swing. This move is a swing. So you take the candle that is highest, or that has the highest candle close, and you draw a level right there. And you're going to draw this level out, and you can see that it is relevant in the future, like here. It is resistance. And if you draw it out further, you can see it is confirmed as support. So this is a way of finding levels too. Try it for yourself. Just use the candle close, for example, here. Not the wick, the candle close. And as you can see here, it is a very important level over here and here. Price action doesn't have to be very precise at the level. It just has to hold. It has to interact with the level. This is important. So the third way is we are looking at high time frame levels on lower time frames. For example, if I go to the monthly time frame here, I'm going to draw this level over here. And as you can see, it is relevant on the monthly, but we're going to look at it on the 4-hour chart. Let's zoom out. So for example, here, this is the monthly level we are looking at. And as you can see, it is confirmed as resistance over here, and price is actually closing 4-hour above. This is a bullish sign. But it is not broken yet, as this is a monthly level, so we have to expect price to come back down. But as you can see, this is a sign of strength, and you can actually analyze I'm sorry, you can analyze this kind of early signs of strength and weaknesses with high time frame levels. If you draw them out on a low time frame chart, and you see how price interacts with it on a lower time frame. This is a very interesting way of analyzing levels. The fourth type is swing high and low levels. So for example, look at a typical swing low. For example, this is maybe not that suited well. Let's look at this one. So we are on the 4-hour chart. This is a swing low. You have a swing, and this is the low area. So what you're looking for is a level that is pretty much at the center of the swing low structure. You see there's a W formation here, and you want to look at the level that is actually creating the structure, or that is dividing the structure like this. Here you can see this level is pretty centered in the structure, and it is certainly relevant. So this is the level you want to look at in the future. And as you can see, if you draw this out, you see that it is relevant, that price comes back and it finds support exactly at this level. And this is something that should be relevant in the future as well, as you can see over here and over here as well, which is the same level. So this is a way of drawing levels very effectively. And you can do this with all the swing highs and lows. For example, this level, you can see that it divides the structure visually. This makes sense to our eyes. So we are going to draw this level out, and we can see, I don't need to look at it. I know that it is relevant. As you can see, it gets rejected here. It gets confirmed as support over here. So there is a lot of meaning to this level. Here is the same story. It is confirmed as support over here. Here's a battle taking place, confirmed as support over here. Here you can see that this is a very effective way of drawing levels. The fifth type is we're looking at the highest candle in a swing, the candle with the high or the low, and we're looking at the opposite end of it. So, for example, let's look at a swing, for example. Let's take this one. Oh no, this won't work. Let's take maybe I'm going to switch the time frame. This makes more sense. Yeah, this is a good example. So you can see this candle over here is the highest candle. It has the high of this structure. So what you want to do is to look at the opposite end. This is the low of this highest candle, and you're going to draw out this level. And as you can see, it is resistance over here, resistance over here. We have a failed breakout. We have a resistance confirmation over here. And once it is broken, we see this very strong uptrend. This is also a way of drawing levels, and you can try it out for yourself. It is very effective as well. Let's take one more example. For example, this one. This is the highest candle, as you can see, with a high on this swing. You take the opposite end, you're going to draw this level, and here you can see it is this support level over here and resistance over here. Yeah, some of them are more significant than others, but you can try and find significant ones, of course. So the sixth type is we're looking at Wicks in past price action. For example, a very strong Wicks. I'm going back to the 4-hour chart. You can do this on all time frames, by the way. Okay, let's take, for example, this is too early. Let's take this one. So you have a wick over here. You can see here there are a lot of wicks. When we have the sideways range, it's very a normal occurrence that we see lots of wicks down. So here you can see there's this wick. And if I draw this one out, because price has already crossed this level has already been crossed. So I'm going to draw this out. And as you can see, when price is below, we can expect this wick to be resistance over here, over here, over here. This is important because wicks can be easily spotted, and this is why they are relevant as well. As you can see, you can also take this one. It's the same story. So look for wicks that look for wicks, draw level, and look for if price has already crossed this level once, then you can expect, once price gets back to this level, you can expect there to be resistance. And the same is also valid for support as well. Yeah, so there's a seventh type of level I want to talk about. It's on the line chart. So let's switch to the line chart. This is it. I'm going to highlight this a little bit. So you have a line chart. You can also draw levels on the line chart. For example, you do it like, let's take this level over here. And when you switch back to the candlesticks, you can see that the line chart is the same as the candle bodies without the wicks. So it's essentially the same technique as drawing levels where candle closes and opens are. The second type I've already explained. The candle, the line chart is basically this. So it is also relevant. You can expect these levels to work very well. Have a look at them and try on your own if you find they are relevant to you or not. So there are a lot of different types of levels you can draw, but I'm going to keep this limited for now because there will be other sessions about drawing levels. We're not going to talk about how significant these levels are, but this is a very good starting point. If you're new to technical analysis, you can try drawing levels now. Mastering this takes a little bit of experience and time, but it is possible, and it is one of the most important skills you can have, because if you are able to identify support and resistance by drawing levels on a chart, you can be very fast in your analysis. You can do fast analysis on lots of different charts, and you can identify the significant support and resistance areas. Of course, it is not possible to estimate how likely it is for price to bounce or reject at certain levels just like that. You need to add different types of analysis tools and methods in order to come up with an answer for that, or you have to fully understand how price action works. But if you're able to draw levels properly, you have a big skill, and this is very, very important in the future. You will see that as you learn more and more about TA, and as you gain experience, you will get to know how important it is to draw levels properly. A lot of people do the mistake and draw levels where highs and lows are. These can be levels, but it is not guaranteed. I would not recommend drawing levels like this. Draw levels like this, for example. Use these wicks over here. Use the swing high structure here. Where's the divider? Use the highest candle and the opposite end of it. Use these techniques. They will be more effective than just drawing a level where the top and bottom is. Okay, so this is it for this session. Thank you, and on to the next.